are showing the potential for a change in trend. So the VIX is inside of intraday long setups. The indices have variations of shorts, which aren't clear unless you're looking at the leading indicators. Bank has a weakness event that it potentially has from our highs of the week to lows of the week. And there are these little dollar strength trades that are developing here inside of our markets. Now, the markets aren't open right now, but it'll be interesting to see where we open up inside of the tick. This is also now going to be the beginning of the third day where both the S&P 500 and the ES have made a new all-time high during trading hours and have failed to close above that previous high. And that to many is perceived as a failed breakout. And so you have all of these little signs inside of our markets that are showing a change in trend or a risk-off type of event. And let's explore that a little bit more here, starting with DXY, our first leading indicator. The dollar right now, in its current form, its current relationship, is a bit of a neutral correlation on the indices, but it is negative for the currencies and it's negative for crude oil, gold, and silver. So we have to keep that in mind here. And the dollar is technically still in this massive weakness event here. Everything below the 97.217 is a dollar weakness trade. And we would expect that below that level, that the euro would keep rallying, the dollar would, the gold and silver would continue to rally. And again, the neutral correlation with the indices, it's going to be interesting to see how that develops over the next coming days and weeks. But you'll also notice that there's a little dollar strength trade here that hasn't broken to confirm the dollar weakness targets below. And we're right in the middle of that consolidation. The shorts, none of them have broken to confirm that the dollar weakness trade is over, but we haven't broken through that counter trend long from lows. This is bank's resistance level from our highs of the week to lows of the week. Any new support has to be confirmed with the break of a short. And then probably the most important and the most exciting is the fact that the VIX, in its very first pullback after a trend break, we had a line in the sand here of the 1838, rounding down to 35, adding a tick here, this 1830s, as we were going into our overnight time frame. And it led us to a potential, inside of that smaller setup, there's a larger VIX-explosion support level that we have from our old contract lows to highs. So the VIX is actually defending daily long setups. It would be like the equivalent of the indices being inside of a gigantic daily short setup. And it ran right to our line in the sand in the last hour of the day, and then defended during Asia, and then defended again during Europe, and we're rallying away from it here. And what we're watching for is to see if the VIX defends an overnight lows to highs here, which it has already one time, and leads us into a continuation of a rally. Where are the targets to the VIX's long setup that it defended its line in the sand? Its targets are up very close to the Monday highs. What would that be the equivalent of if we were to create a divergence on the indices and were to fall back into a Monday low? Well, look at where our Monday low is down here, the Globex low. It's all the way down at 68.79. We're in the 7,014 up here. So there's an incredible divergence. And maybe you could make a case that that is caused by the dollar weakness trade. It's certainly a possibility. But that is an incredible divergence. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.